Probal Sen, who is a Senior VP and Research Head as well, to talk about these numbers. Probal, how do you dissect the earnings and the inventory losses?
Yeah, I think, CPCL and IOCL numbers have obviously shown us that this quarter is especially going to be a weak one for all downstream companies. And, even Reliance's GRMs for that matter were at a 3-year low. So, it's not a surprise that HPCL numbers are expected to be weak, specifically from a refining perspective. As Ajay was saying earlier, at least from the marketing front, that does provide some relief. The fact that, retail fuel margins have actually gone up quite sharply over the last quarter, and we've seen even more expansion in Q4. But just looking at the oil marketing companies' perspective, I think this quarter is going to be a washout one from refining perspective. And what is more worrying, from a stock perspective, is that Q4 margins have actually declined even more. I mean, if I look at last week's GRMs, for example, gasoline has actually slipped into negative territory. So while we keep waiting for the IMO-led boost in diesel to actually make things better, the fact is that the large-scale dumping of gasoline in the market, specifically from US refiners, is actually leading to an unprecedented sort of weakness in the gasoline markets, and it's very difficult to see, at least in the near term, any recovery in that. As far as GAIL is concerned, our numbers are a bit more optimistic, than probably the street. We're at about 6.5 rupees of EPS. I believe the street is closer to 6. And, we do agree that, gas trading is going to be very, very weak compared to the last quarter, where they reported a blowout, kind of an earnings, because the differential between US LNG and spot LNG has obviously narrowed quite a bit in this quarter. As far as petrochemical is concerned, I think, there are some estimates which predict a loss on EBIT front. We still believe that they will be able to eke out a small positive number. So that's going to be a key monitorable. But from a stock perspective, I think what is interesting to see is what sort of trends does one build in, specifically in the gas transmission and trading segment going forward, because at the end of the day, the petrochemical business has shown a sort of stability as far as volumes is concerned. LNG prices have come off again, so in Q4, if they manage to get operations back up, the earnings from that segment is likely to improve. But it's more the fluctuation in the gas trading business that should drive the stock prospects, at least over the near term.
Okay. So, Probal, given at the current valuations where HPCL is, if the numbers are along expected lines, where do you see the stock headed?
I think, what is interesting about, as I said, it's not so much, as you rightly mentioned, this quarter, prospects have been written off in any case, because the refining business is where it is. But what is worrying, as I said, is that the market doesn't look to be coming into balance anytime soon. I mean, if you look at the way that refining margins are behaving, it's very difficult to see where the silver lining is in the cloud. And because of that, even though marketing margins have improved and are fairly strong right now, in the current political environment, nobody is really going to give a multiple to the marketing business, because those numbers have been volatile over the last 1 year, and nobody quite believes that these current levels of somewhere between 6.5 rupees a litre are actually going to sustain for a sustained period of time, which is what is needed. I mean, just as a thumb rule, I mean, every dollar of dip in GRMs requires blended marketing margins, and I'm including all products that they sell, retail fuels, ATF and the like. That number needs to go up by 300 odd rupees per ton, which is a tough ask even at the current levels. So valuations remain cheap. There's no doubt that valuations are at a low when you look at the last 3 or 5 year trends, but that's not necessarily a reason for us to start to rush into these stocks at this point of time.
Okay. But what would be your pecking order when it comes to the oil and gas sector in terms of your high conviction ideas?
Well, at this point of time, and we have been saying this for some time, we continue to remain more positive on the gas space. We do believe that if you look at the structural, fundamentals, or look at the business case at this point of time, the city gas distribution entities as well as GAIL probably are best placed to weather the storm. I mean, it's not just the operational macro that is uncertain, but we are in a fairly volatile political environment as well. I mean, there are elections due, and that does cause a little bit of uncertainty on earnings visibility, specifically of the large PSU oil companies. In the gas space, the policy measures seem to be more inclined towards improving profitability of the gas companies, and the growth prospects are more visible as well. So from that perspective, we continue to like the city gas distribution names. Gujarat Gas, GAIL are among the top picks in terms of just business prospects and growth, followed by IGL and MGL in that order at this point of time. We would stay away from or be cautious on the downstream names at the moment. And of course, we remain fairly positive on Reliance. Not so much from only a downstream energy environment, but from a structural view of the kind of earning strength that we see over the next 2 to 3 years.
Probal, great to have you on the show. Thanks so much for analyzing what we can expect from both HPCL as well as GAIL's performance, and of course giving us your top favorites from within the oil and gas space. That's the view.